Hello everyone, welcome again to this session. This is Sambuin Forex, Sambuin Forex. In today's episode, I'm going to be teaching you, I'm going to be nurturing you on how you can protect your forex trading capital. I am going to teach you how you can place a trade and you go chill. I'm going to teach you how you can place a trade and you go take a course, you go do your classes, you go do your professional course, you go follow your job site, you go work at your job site and do your expensive businesses. Meanwhile, your forex trading account is being protected. Stay tuned to this to the end of this video and grab everything that I will be saying, because with forex trading you can't place trade and you go chill and your account is being protected. So for today's session, I'm going to be using the Great British Pound versus the US dollar. The second currency pair you see there. You can place a trade, you go chill and you come back, you see all your trade are in blues. So I'm going to teach you that in this video. So let's take the second currency pair you see there. We have GBP USD. That is the Great British Pound versus the US dollar. So let's go to it. We are going to do our analysis based on that. Remember, last time I already uploaded a video on how you can calculate lot sizes, on how you can calculate pips. In this video, I'm going to teaching you how you can protect your forex trading account. Forex trading account is very important. What people do ignore at time is that the principle of continuous trading, it is based at the rate at which you protect your account. So for this video, I'm going to be talking I'm going to be using lot sizes. Remember, I've already uploaded a video that talks on lot sizes. You can check my video on Sambuin Forex trading practicals. I have uploaded video 1 to Sambuin Forex Trading Practical 1, Sambuin Forex Trading Practical 2, Sambuin Forex Trading Capital 3, and this is the fourth video that I'm going to publish and upload on YouTube. I will title it as Sambuin Forex Trading Practicals 4. So in this video, we are going to be doing analysis based on a standard lot size, the mini lot size, and a micro lot size. If you don't know what these are all about, check my previous videos. You will get that to understand what micro, mini, and standard lot size are all about. So I explained this video in my last video I uploaded in video. So today I'm going to be very brief with what I'm going to be doing today. So I told you that if you check at this point, I told you that you can manipulate these values and change a value from this. I told you from last video that 0.01 to 0.9 is a mini lot size, and if I take that and I change the value to let's say 1 to 0.1 to 0.9 is a micro lot size, and anything above at 1 is a standard lot size. And you can have values that ranges from 200. You can have values that ranges that goes up to 100. So that is what we call a standard lot size. So a standard lot size normally basically is a lot size of 1. I explained that in my previous video. So today I am going to be explaining how you can protect your account. The first principle I'm going to be doing, I will take a very small lot size account. The second one, that is the mini lot size, the micro lot size, and the standard lot size. So let's begin with the mini lot size. So if you take a mini lot size of 0.01, if you take a mini lot size of 0.01, this is a mini lot size. Now, if we are based with this mini lot size and we are trading a forex capital, we are trading forex, and we have, for instance, we can have any amount in our capital, be $100, $1,000, be $300,000, whatsoever. If we want to risk, let's say $10. Let me take the analysis of $10. If you want to release $10, one principle you have to know is the concept of stop loss and take profit. So take profit is the maximum amount of points you as a trader you want the broker to automatically take your profit when that particular point is being attained, and stop loss is the maximum amount of money you want to lose. So in simple principle, stop loss is the maximum amount of money you want to gain, and take profit is the maximum amount of money you want to gain, and stop loss is the maximum amount of money you want to lose. So if you are trading a 0.01 loss size and you want to risk $10, what you want to lose a maximum of $10, a maximum. Let's say now the first aspect, you want to lose a maximum of $10. Now if you are in a buy trade, what you understand is that if you are going for a buy, it means that the market is going to, you are predicting that the market is going to increase. So if you place a buy and you want to reach you want to lose a maximum of $10, this is where you come, where you see stop loss. You come at stop loss, you come then. Since you want to lose a maximum of $10, where you see 9, you have to change that 9 and change to 8. So you have decreased the so it means that the market has decreased by 100 pips. I hope you understand. It means the market has decreased by 100 pips. What does that mean? That simply means that if the market decreased by 100 pips, which is equivalent to $10, I remember I explained these values, pip and the rest in the order in my previous video. Make sure you check my videos that talks on pips and loss size analysis. That should be Sambuin Forex Trading Practicals 3. You should check in on my videos. So it means that you have decreased the market by 100 pips. Since you have decreased the market by 100 pips, it means that 100 pips is equivalent to $10. So it means that since you have decreased the market by 100 pips, it means that if the market decreases and reaches that particular value, since you have decreased by 100 pips, when that 100 pips is going to be attained, the trade will be automatically be closed. Remember, you are predicting that the market is going to be uptrend. Since you are going for a buy, it means that the market price will be increasing, and if it decreases, when it reaches 100 pips, the market will be automatically closed. I hope you understand. So in this case, our stop loss, generally stop loss are always in the ratio of 1:2. Stop loss and take profit are always in the ratio 1:2 and 1:3. Remember, if you are risking something, if you are risking one thing, you should get at least 3 or 2 of it. I hope you understand. So since you have reached 100 pips here, it means that our take profit on the right hand side here, basically, since we have decreased the market there by 100 pips, it means we are going to increase the market price in the take profit by 300 pips. I hope you understand. And if you do that, if you increase 300 pips, since this is already 9, it cannot go. Okay, let's take 2,000. Okay, we'll change that one. Let's change the 1 to 2,000. So we'll change the 1 to 2,000. Since we are risking 100 pips, let's put 2,000 and let's put 2 here. So you see, so the market, so it means that here, since we are going for a buy trade, we have increased the market by 300 pips and we have decreased the market by 100 pips. It means that the maximum amount of money you want to lose here, which is a stop loss, is $10, and the maximum amount of money you want to gain here is $30. This is for this loss size. I hope you understand. You can do the analysis for others. You can do the analysis for others. Make sure you watch my video that I explain on all these things, on how to calculate these pip and loss size. I explained them very well. I took time and I explained that very well. So let's assume that we're now going for a sell. Before I go to a sell, one thing you should note here is that if you are going for a buy trade, if you are going for a buy, basically the take profit is always higher than the stop loss. That is the first thing you have to understand. For a buy, it means that the take profit is always higher than our stop loss. That's why you see our stop loss has decreased by 100 pips and our take profit has increased by 300 pips. So I'm going to take for a case where now the second case, if we are going to take a case for a sell, remember, if for a sell we are predicting that the market is going to decrease. Since we are predicting that the market is going to decrease for a sell, it means that if the market decreases, you are on profit, and if the market instead increases, you are making a loss. So by that jurisdiction, it means that by definition, for a sell trade, our stop loss will be higher than our take profit. I hope you understand. So it means that if we want to lose that same $10 for a sell trade now, if we want to lose $100 for a sell trade, we can come here and increase the market by 100 pips. I hope you understand. We increase the market by 100 pips, and if we increase the market by 100 pips, we are going to have something of this nature. We are going to have the market like this. I hope you understand. So it means that at this particular since we are going for a sell, we have to increase stop loss, because we are predicting that the market is going to decrease. And if the market keep increases, when it reaches this particular value, the trade should automatically be closed. That is why I have increased the pip to. I've increased 100 pip to the value you see on the stop loss on the left hand side to 2,154 pips. The last figure 0 is a pipette. Make sure you watch my previous video. I hope you understand. So since we are predicting that the market is going to sell for a it means that the price will decrease for a sell trade. Generally, the stop loss will be higher than the take profit. And our take profit, since we are predicting that the market is going to decrease, we can bring this you see from the pip there, we can reduce 900 to 600. We bring 600. So that will become so it means that at this particular place we have reduced the take profit. We are predicting that the market is going to reduce by 300 pips. So it means that in this trade, since we are predicting that the market is going to sell, it means that you are shorting, you are going short. It means that in this trade, if the market increases by 100 pips, you automatically lose $10, and if the trade decreases by 300 pips or it decreases and reaches the value you see on the right, or up to 1,600 pips whatsoever, what you see then, it means that you are going to make a profit of 300 pips. I hope you understand. So if we sell, the stop loss is higher than our take profit, and for a buy, our take profit is higher than our stop loss. Remember, you watched my previous videos on how to calculate, how to analyze stop loss, how to analyze lot sizes, and how to calculate pips. You understand that in my previous video that I uploaded, captioned Sambuin Forex Trading Practicals Terrain. I hope you understand. This was a case for a 0.01 lot size. If I increase the scenario to 0.02, remember in my previous video I said for a 0.02 lot size, if for a 100 pips, if the market moves by 100 pips in a positive direction, we are gaining $20, and if it moves against our direction, we are making a loss of $20. And the same case, let me take the maximum 0.09. If the market moves 100 pips in a direction, we are making a profit of $90, and if it's against our direction, we are making a loss of $90. You can do the analysis for this particular. You can do the analysis and insert the values of stop loss and take profit. So with these values of stop loss and take profit, you can set this. These are parameters that you set, and you go chill, or you go attend your class, or you go at your job site, or you go do some business meeting, or you go do some expensive whatsoever kind of things you can do. I hope you understand. And it's good because you don't expose everything in your capital. When I was beginning forex trading, I used to leave everything in my account, and at times I will my predictions, I will be saying, the market is going to move in my direction. The market will move in my direction. When I discover I am losing, I'm only losing $20. I'm losing $100. And when I want to see I'm losing $100, $1,000, and before you know it, you are blowing your account. So don't always say that no, I will trade forex with that stop loss and take profit. The first law of forex trading is first understanding how to set your stop loss and understanding how to set your take profit, because these parameters, it redefines your mind and identity to enter a trade. It defines your entry and your exit when you use stop loss and take profit. So you cannot do forex without it. So if I take the second case where I'm going to talking of a micro lot size, remember I discussed all this. What I used earlier was a mini lot size. 0.01 to 0.09 is a mini lot size. So this is what we talk of a micro lot size. So for micro lot size, what we are going to do, let me erase this stop loss we set here. Let me erase the stop loss that we set here. I hope you understand. Let me erase the stop loss that we set here. Since we set some stop loss here, I'm going to erase all those stop loss and all those take profit, and we are going to reset them automatically. So generally, if we are in this case of 0.1 lot size, remember I told you that a pip move is equals to $1 move. It moves with dollars. 100 pips moves equals to $100, that kind of stuff. So it means that if I place a trade and I'm going for a buy, let's base analysis for $10. Let's base analysis for $10. Since we are on $10, remember, since we are basing our analysis on $10, remember I told you that for this lot size, a pip move is equals to $1. So if we are taking 10 pips, it means the market is going to move by $10. I hope you understand. So let me take the case of 100 pips. No, if I take the case of 100 pips, it might confuse you. No, let me take it for 10 pips. Since we are taking 10 pips here, let me put you change that 5 to 6. It means the market has moved by 10 pips. It means that if the market increases by that 10 pips, you are making a profit of $10. I hope you understand. For this lot size, it's different from the other one. Remember the last one of 0.01 lot size, I use 100 pips, but this one I'm using 10 pips. It means that if you use 100 pips or 300 pips whatsoever, you are going to be having, for instance, you are going to be talking of money of $100. So you have to be very careful when you increase your lot size. This is where many forex traders do mistakes. When you increase your lot size, you are going to make problems. So the first criteria, like I said, is that forex and risk management, first principle is that it's always in the ratio 1:2 or 1:3. So always begin by setting the stop loss. If we want to move, if we want to let's begin with the stop loss. If we want to lose, we are going for a buy, and I say for a buy, the stop loss is lower than our take profit. And if you take the ratio of 1:3, it means that if we are predicting that the market is going to buy, it means that our stop loss will be minus 10 pips, and minus 10 pips will be will give us this. So you have decreased the market by minus 10 pips. So you see that what at this particular trade, you are seeing that if the market, since you are predicting that the market price is going to increase, and if the market decreases by at least 10 pips, the trade should automatically be stopped, and you lose your $10 rather than blowing your account or losing everything in your account. And since you have set 10 pips, a decrease of 10 pips, it means that your take profit should be something higher. So you are going to take that. I told you 1:3, so it means that you are going to put that to 8. So you understand. So it means that you have increased the take profit to plus. It means that it's plus 30 pips, and the stop loss is minus 10 pips. It means that for this trade, since we are going a buy, it means that if the market decreases minus 10 pips, $10 will be automatically be cut from your account, and if the market increases and attain your value of plus 30 pips, $30 will be automatically be taken into your account. So you can place this trade, you place a buy, you go chill, you go do whatever kind of stuff. You have a steady mind, knowing that your account is protected, rather than exposing everything in your account, and it becomes very difficult, because when you don't protect your account, you keep seeing your screens, keep scrolling your screen. Many people do ask me that you have a good job, you have this, you have that. Why do you trade forex? I trade forex because I have mastered the basis, I have mastered the principles, and these are the principles that I'm downloading and I'm giving you, that you cannot get it anywhere. So since you are predicting a buy, the market has the market will increase by plus 30 pips. I hope you understand. And when that particular plus 30 30 pips will be reached, you are going to having your $30 that will be automatically be taken into your account. And if the market goes against you, automatically you are going to lose $10 that will be cut automatically. So you see that regardless your trading capital, regardless of the amount, let's say you have $1,000, you have $10,000, you have $100, whatsoever in your account, if you are in a loss, what will be taken at any time will be that $10. So you see your money will be protected. I hope you understand. Alright, that was a case of a micro loss size. Remember I said a micro loss size is a loss size of 0.01 to 0.09. Just for this one, it means that for 0.09 loss size, a pip move is equal for this. Like I told in a previous video, a pip move is equals to a $1. I hope you understand. So since we're talking of 10 pips of $10, it means that if the market move by for 0.09, the market move by 1 pip, we're making a profit of $9 if it is in a direction, and negative $9 if it's against a direction. So if for 10 pips you're making a profit of $30. You're making a profit of, you're making a profit of $90. I hope you understand. If it is a direction and if against us, you're making a loss of $90. I hope you understand. For this same loss, for this same setting that I've said like this, because we have put our the market price will move by, since we have said 10 pips and we have increased the market to 30 pips, it means that our take profit here automatically will since the market move by 30 pips, which is equals to $90. I hope you understand. It's equals to $9. It means that the market, you are going to multiply 90 times 3. So it means that our take profit is multiply 180. Multiply 90 times 3. It will gives you. That will give you $270. Yes, it will give you $270. And if you want to do this, it gives you minus negative dollars. So that is it. I hope you understand. Alright, that was the case for 0.9 loss side. That is the macro loss side, which is from 0.1 to 0.9. So now let's talk on the standard loss side, which is the standard loss of 1. I hope you understand. The standard loss size is the one with 1. So before then, if you have not subscribed to this channel, do subscribe so that you won't lose our upcoming videos. Alright, for this case, the scenario here will be different from what you have seen so far. This one, remember, the standard loss size of 1 is a loss size that is suitable for big accounts. Big accounts are accounts from $1,000 and above. Any account less than $100 is a small account. I hope you understand. So with this account, let's see the stop loss. I will erase the figure there so that I will reinsert new figures for the stop loss. The same way for this one, so that I will reinsert figures for the stop loss. Remember, I said stop loss take profit must be in ratio 1:3. So if we are in the case of stop loss, and remember I said for this standard loss of 1, a pip move equals $10. It means that $10 is equals to $1,000. Then 100 pips move will be equals to $10,000 move. And in that same category, if you have if you have 1,000 pips, it means you're going to have $100,000 move. I hope you understand. Let me take it over again. For this one standard loss of 1, it means that a pip move you are going to have $10. It means that for 10 pips move you are going to have $100, and for 100 pips move you are going to have $1,000, and for 1,000 pips move you are going to have $10,000 move. Yes, that is it. So if you want to go for a buy, remember I said for a buy the stop loss is always less than the take profit. if you are buying, if you want to buy at this standard loss size, it means that if you want to let's say want to lose 10 pips. Generally, if you want to lose 10 pips, it means that we decrease. If we decrease the market by 10 pips, let's decrease the market by 10 pips. If you decrease the market by 10 pips, that's that is 10,000 1,945 pips. That 5, you see there's a micro pathway. The market is decreasing. So what we are going to do is that we are going to use that value to trade. So you have decreased the market from 45 to 35. So market has decreased by, so if you understand very well, you see the market has decreased by 10 pips. So you understand. So it means that if for this loss size of 1, it means that if the market decreases by 10 pips, you are making a loss of $100. I hope you understand. So because if you are placing a buy, you're predicting the market is going to increase, and if the market keeps decreasing, when you set a stop loss at this particular point of 10 pips, a decrease of 10 pips, it means that when the market decreases and reaches at 10 pips, automatically the trade will be closed. And since you have raised 10 pips here, it means that if you are taking take profit, the take profit should always be higher than our stop loss. So it means that since you have raised 10 pips, we are going to add 30 pips here. So we're going to have something of this nature. So we're going to have plus 30 pips, which gives us that 76 you see there. I hope you understand. So it means that if we are losing, if the market moves by 10 pips, we are losing $100 here, and if it is in a direction, when it hit our take profit at plus 30 pips, we are going to make $300. That's for 10 pips. So you understand that with mini loss size, the market move is very slow. With the micro loss size, it's a bit fast, and with the standard loss size, the market move is very fast. So when you trade this account, you can make loss at all times if you don't enter the trade at the right time. So let's take the case if we were to sell. So let me wipe again. Let me erase again these concepts of take loss and take profit, so that I will erase and I will again use now for a sell. Remember, if you are to sell, it means you are going short, and if you are going short, the stop loss must be higher than the take profit. So in this case, if you want to take the stop loss, if what we are going for a sell, it means it's a prediction that the market is going to be downtrend, and if the market is downtrend, the market begins to go up, it's against that direction. So if I come at a stop loss, I would I will increase the stop loss by 10 pips. So let me increase by 10 pips. It will be, I've increased by 10 pips to give you that value 56. I've increased from 45 to 56. So I've increased 10 pips. So it means that since I'm saying the market is going to decrease down, the market begins to increase up. When it reaches at that plus 10 pips, it should be automatically be closed. I hope you understand. So it means that in this case you are going to lose 10 pips, and since for loss of one, you're losing $100. And since you are predicting the market is going to go down, remember I told you stop loss take profit is always in the ratio 1:2 or 1:3. So if we're taking 1:3, it means that we're going to have minus 30 pips down. Since we are decreasing, we're going to have 1. So you're going to have something like that. So it means that if the market reaches at this particular point, you're going to make plus 30 pips, and since for this particular price we are going to make plus $300 gain. That's our take profit. So you can do the analysis, do for 2 pips, do for you can change the loss size to 2, you can change the loss size to 10 of your choice, you can change the loss size even to 100 depending on you. But know that as you keep increasing the loss size, the risks keep on increasing, and that's how you be on loss. And if you are not careful with the entries, you can be blown out. So that it is with what is very hard for today. If you have any comment, drop your comment in the comment section. Do all to subscribe and share, and stay tuned for our upcoming video. Peace out.